Today, I'm going to share with you the biggest mistake that I see real estate investors make when picking an out-of-state real estate market to invest in. And I'll share with you the major reason why that methodology doesn't work. And finally, at the end of the video, I'm going to share with you a better way that you can use to identify high growth prospect markets to invest in. Hello everybody, this is Arion with Investing Architect, and I actually just got back from a run in the rain, and it's been a little cold today, but it was pretty exhilarating, so feel pretty energized. So first, let's dive into the biggest mistake that I see real estate investors make when picking a market to invest in. Now, first, let me start by saying that I understand that there's just so much data out there. It's like, where do you even start, right? Like, if you're in a market that is not very conducive to investing in real estate, where cash flow is a thing of the past, or if you're in a high property value market, it becomes clear that if you're going to invest in real estate, if you're going to take these steps towards financial freedom, you can't do it in your local market. But then how do you move from there to where you should go next? There's all these options, and then there's all these markets that you can invest in. How do you know which one is the right one to invest in? And the biggest mistake that I see investors make is they rely on the types of articles that write about the top 5 real estate markets to invest in for 2020, right? And or the top 20 markets based on population growth and based on appreciation rate and price to rent ratios and so on and so forth. And that method sounds like a good idea because it's like it almost shrinks all of your options into these handful of markets. But here's why that methodology doesn't work. All the data that they're using to basically select these 4 or 5 markets as the best to invest for 2020, it's all backwards looking data. So to give you an analogy for this, saying that investing in X market, it makes it a good market to invest in 2020 because it's done well over the last 5 years, is the same as saying you should buy Apple stock because it has gone up 200% in the last 5 years, right? That in the stock market, they tell you, past performance is not a guarantee of future results. So because all the data is backwards looking, at best, you are catching the very end of the wave. At worst, you are probably too late for that marketplace. By the time a market makes it on one of those lists, you're probably too late to that market. You should have invested there 3 or 4 or 5 years ago and sort of caught the wave. Now it's like we're looking in hindsight, and sure, that tells us that was a good market, 3 or 4 or 5 years ago, and it has played out well. But what it doesn't tell us is what that market's going to do in the next 5 years, right? So, what's a better way then? How do you then determine where you should invest, right? Where do you start? So, to keep with the stock market analogy, instead of looking at the Apple stock and say, okay, well, I should buy more Apple stock because it's done well over the last 5 years, what you should do is you should use the Apple stock as sort of your starting point for your research. And instead of looking and buying more Apple stock, you should look in the Apple stock sector, which is technology stocks, and find out which one is the next Apple that hasn't maybe gone up yet. Same thing with the real estate investing. If let's say you've got Atlanta on the list of top 5 markets to invest in 2020, you're probably too late for Atlanta. However, you can start in Atlanta and you can see, okay, in that sector, in that section of the country, what are the towns and the neighborhoods and the areas on the fringes that maybe haven't seen the appreciation yet, or they haven't seen the growth yet, right? And that's where your gold is. It's in these secondary towns that are, think of the main metroplex as a big magnet, right? And as that metroplex grows, it starts to pull and it starts to affect all of the towns on the fringes, and they also get brought into the fold. So that's my advice for you is start off with those top 5 markets to invest in, but don't invest there. Find out what are the markets on the fringes that you can then catch the wave and ride it all the way up. Again, this is Arion with Investing Architect. I hope this was helpful for you. I hope you have a great week, and I appreciate you watching.